People are recently very concerned about the consequences of the trade war. From the Chinese side, they're calling this a war of endurance, and the Communist Party know exactly how to fight this war of endurance. But the longer-term consequences are much more interesting. This will actually make China stronger. It is going to accelerate the domestic reforms which have long been delayed because now there is a political unity to fight against a common rival. China is now shifting its policies more inward, knowing that it can rely a lot less on foreign exports, on foreign technology. So there's a sense that there is no way out. And the only way to do this is to push through reforms, to make consumption bigger, and to rely much more on indigenous innovation and domestic economy.
Innovation is probably the most important topic that banks have to tackle today. It is hard to define what it is. It can be coming from the product side, it can be coming from the technology side. It has to come from the top down. It has to be something that the leadership, the senior leadership lives on a daily basis and is encouraging across the firm. And obviously we need to innovate in a regulatory space, we need to innovate within the boundaries that regulations give us. At the same time, we need to, with innovation, capture the attention of our clients and customers. And so that's the tricky part.
Family offices have become more professionalized. They're considering more global opportunities because the opportunities themselves have become more global. And so therefore we have seen a natural progression in shifting from local opportunities, which was investing in countries where family offices were from, to global opportunities, which encompass clearly opportunities from across industry sectors and obviously countries. Direct investments used to represent between 10 to 20% of the allocation normally of family offices. Today we've seen certain family offices allocate up to 50, even to 100% of their wealth to direct investments. This is because they can manage the investment very efficiently. If something goes wrong, they can fix it. They've created certain philosophy for businesses, usually cash generative investments, where they can put their money safely for the long period of time. You get one or two shots of showing that idea which has an edge, which is relevant, which is topical. Therefore, you earn the trust of the family office.
Fund managers want to have a presence in the UK, but also want to have a presence and have a foothold in the European Union. Malta is the perfect place to be. I'd say Malta is a global center, but I believe that Malta, given its size, the fintech space is an area where Malta can be a leader, because fintech doesn't really have geographical boundaries. So Malta is really positioning itself as a center for technological innovation, for blockchain technology, for fintech, crypto asset regulation. So we see our future going in that direction. And I believe that banks, private banks, wealth managers, fund managers, who want to innovate and develop their business model using also benefiting from the technology, Malta is the perfect place to be.
I think every year we are collecting more and more information around our clients. Some of that information is through our discussions directly with them. Some of that is how, for example, customers are using the platform that the bank provides to them. We provide private banking services to global citizens, so our clients are round-the-clock clients. They're businessmen, businesswomen. They have a range of needs. They may have asset management in one area, they may have trading activities in another, they may have a family, a specific set of banking services that they require in other areas. So what we're trying to do is, as best as possible, is meet their needs, both through technology, but also through their relationship managers as well. So in that sense, technology and how we incorporate the information that we learn about our clients has to be to support the relationship, and has to be to actually help the client by delivering to them something that is ever more relevant to them and ever more customized to them as well.
technology is really important to attract the future generations, but also keeping the existing generations. It's a matter about making the advisors to be the kind of super advisors. So it supports how to generate a fantastic meeting between client and advisor. But it also, for the next generation, is really important to have the sufficient and relevant interaction, which also includes a higher touch of digital solutions than we are using today.
We're seeing a strong trend for women and for millennials to be more interested in sustainable and impact investing. So for example, if we look at the 18 to 34-year-old age group, we see that more than 80% of them are interested in sustainable investing being the majority of their investment portfolio, whereas for the over 65 age group, it's around about 3%. I think we're seeing a growing awareness today of global sustainability challenges among the younger population. Greater connectivity, more awareness of what's going on in different countries, and a greater sense of responsibility, particularly among wealthy people and wealthy families, that they should somehow use their wealth to do something good.